Real estate investors, are you struggling? I mean, with today's market right now, not sure what market's good, what market's bad. Look, I get it. Whether you're brand new or you're already seasoned and you're looking for better ways to close more deals, you're in the right place. Each week, I pick a random house off the internet, analyze it for a cash deal and a creative deal. Welcome to the Corner Barn. I am Chris Thompson, that bearded guy, the creative guy, second generation realtor and investor with 19 years in the business. When I started this podcast, my goal was simple. It was to help beginners and struggling investors close their first deal or their next deal, all while using low to no cost tools to analyze properties and craft strong offers. This is the weekly deal analysis. Let's get into the show. Real quick, I have one favor to ask. If you haven't done so already, hit that like button. And if you know somebody that might find some value in this, share it with them as well. This week in the Corner Barn, we are going to be looking at 351 Carroll Street in San Antonio, Texas, 78225. This home is asking $171,000. It is a three-bedroom, one bath, a little over 1,300 square feet, and they have been on the market now for 79 days. Let's take a look through the pictures and see what they're telling us. Nice little front porch here. Looks like a metal roof, vinyl siding, crawl space because those are the vents right there. Nice hardwoods. These hardwoods look a little beat up, very dated. I can tell just by the light fixture and the drapes. Definitely older kitchen. Seems to be fully functional though. Looks like a tile floor. Whoa, that's some colors right there. And that furnace, that thing looks old. Yeah, it looks like it's leaking of some sort here. Overall, pretty solid house. It's dated. It does need a good facelift, but overall, I think a solid place. And I would plan on new paint, new flooring. Outside looks really good. Let's see. So we need paint, flooring, an HVAC, a bathroom, and a kitchen. Probably save the appliances, but I would definitely want to upgrade that kitchen some, maybe. What is up with this sink? Is that two sinks there, or is that just something laying there? Can't tell. Weird layout. All right, that's what we can tell from the picture. So let's see what the agent is telling us. And they do have a one-car garage out back, which is nice. Let's see what they're telling us. No HOA, built in 44. One-car carport also. Not giving us ages on anything, and they are selling it as is. Sellers won't pay for any repairs. All right, well, that tells us what we need to know right there. And value-wise, we got a 177, a 171. Median list price in the area is 245. Median sold is 260 in 66 days. So we know we're well over that. What else do we got in here? Here's one from the same street, a little bit smaller, but maybe that'll give us something. All right, sold in October. Similar-ish layout, smaller, obviously, because it only has the one, excuse me, two bedrooms. Not going to tell us much here. All right, so this is the one we're looking at right now. So that's 1328 square feet. And our potential comp, wow. All right, so that's a lot smaller. So we know it's going to be worth more than, well, we don't know what it sold for because again, Texas is a non-disclosure state, just means they don't, it just means they don't disclose what the sale price was. I'm not sure why. Uh, Not sure why. But they're guesstimating that one at, did I go too far? No. What the heck? So they were guessing that one at, just call it 106. We're sitting at 171. Um, a lot smaller, so maybe 150. I mean, it's pretty significant. It's almost double the square foot. All right, so we're gonna say our ARV or after repair value is gonna be that one, say 160. Let's see what else has been, see what else has been selling in the area. We can find that. All right, so we got a 165, 160, 60, 60. That's a whole lot bigger. These pop up, maybe that would help. So they actually show me some pictures. I mean, overall, it looks like we're in that range of, I'm scared to say 150, but I think it might be 150. I think we can push that. And again, I don't know this market. I'm just, a guy on the internet drawing random properties up. So I think all in, we'll say 160 is our after repair value or ARV. So ARV stands for after repair value. 160 is our ARV. All right. I think we pulled up everything we can from Realtor on this. So now let's jump over to the InvestNest and analyze the cash deal. I've got it pulled up here on the InvestNest. I love this site. If you want to try it out, I will have a link below that will get you your first week for free and 50% off your first month. Try it out, see if you like it. I have absolutely no idea what the cost is, but I know it's minimal and I know it's a whole lot less than uh, your prop streams and or your privies. This thing is really built for beginners and honestly, people on a budget. So let's dive in here. Oh, another thing. If you want to skip trace, they do offer that. It is included in your monthly plan. They don't charge extra for it. Finance details. Let's see if they'll tell us anything in here. Not giving us anything. That's why I don't like non-disclosure states. This was bought a year ago. They bought it in 23, and then something happened here, and now it's just one of them on it, and that's from about a year ago. Location, San Antonio, Bexar County. That will come into play when we check HUD. And so they're estimating the value at almost 180 and 1631 for rent. Let's jump back over to Realtor real quick and see what else we can find on the rent side. Single family, 1250. That seems odd to have a big range like that. All right, so that's 18, and we're not nearly that big or nice or anything, so townhome singles. So if those are all coming in around on the low side, around 18, I think we're gonna stick with what the Invest Nest was telling us. Yeah, I think we stick with what the Invest Nest is telling us, that 1631. So that is going to be our projected rent numbers. We're just going to call this the street name. All right, our purchase price. So we said our ARV, or after repair value, is going to be 160. We talked about doing some good renovations in there, from the paint, the flooring, the kitchen, and the bathroom. I'm guessing that's going to be around $50,000. So how we come up with our purchase price is we take our ARV of 160 times 70% minus our repairs. And we're thinking they're around 50,000. Oof, that's bad. That gives us an offer price of $62,000. I don't know if the seller's that motivated, but again, remember, I'm the creative guy. So I'm going to use a really bad lowball cash offer to get them more enticed and more intrigued into my creative offer. So our offer price is going to be a whopping $62,000. We are going to pay both sides of the transfer tax and closing. Our lender is going to charge us 2 points, whether that's your regular everyday lender or a DSCR lender, debt service coverage ratio lender. We'll break that down a little bit more, but that's kind of what it means. They base everything off of the production of the property, not you, the person, with your tax returns, W-2s, anything like that. Plan on putting 25% down. Interest rates for investors, last I heard, was about 6.75. And we want to do a 30-year amortization. Now, here's one thing that they do roll in here as well. I want to put my renovation and improvement costs into my loan. So there's the 50 grand right there. And we'll stick to that rent. But let's double check while we're here. Before we lock that number in, we're going to jump over and check Section 8 or HUD on their website. So I'll have a link for this below as well for everything that we're using today. So in this zip code for a 3-bedroom, HUD or Section 8 says they will pay $1,460. I think we're going to stick with that Invest Nest number, or should we just split the middle? I think we split the middle. What do you think? 1,500? We'll try 1,500 to see how the math works. Let me adjust my numbers here. Property tax, we're going to go off of what they're telling us because we don't know. Insurance, I like to factor in $125 a month, which is just $1,500 a year. Our property manager is going to be 10%, and our tenant's going to be paying all of our utilities, and there is no HOA. Reserve fund, for me, I call it my war chest. That's 5% for repairs and maintenance, vacancy, and capital expenditures. I think we can remove the CapEx on this just for now, but in another probably 2 to 3 years, we'll have to add that back in. And the reason I'm doing that is so that we're going in to renovate this whole thing, so everything's already going to be new. So we don't need to set additional aside right now for the additional expenses. Plan on our appreciation rate going up 2% per year. That's the value of the property. And I want to increase my rents 2.5% per year. plan on holding it for 10 years, and we are real estate investors. We do not pay full commissions. All right, let's see what these numbers look like. You were waiting to see if it cash flowed. I get it. I just have to ask one more time. If you haven't done so already, hit that like button and share this with somebody who else might find value in it. And we have a winner. Not the greatest cash flow deal, but 170 a month for $32,000 out of pocket. It's not bad. Let's go through the rest of the breakdown here. Cap rate is almost 14. That's more of a multifamily thing, but the capitalization rate is what that means. DSCR. So basically they look for at least a 1.1, a 1.2. This one hits just over 1.3. Cash on cash return, 6.25. And all that is the cash I put out, the return on that in percentage form. And then return on investment, or ROI, is almost 13%. That's really good. 1% rule, if you follow that, it more than exceeds that. And another thing I love about the InvestNest, it breaks down all your numbers so you can see where everything goes. Obviously, Texas property taxes are high, so that is our largest expense right there in that mortgage payment. But we are cruising on this the whole way. So by the time that 10-year hits, we are at a 14% cash on cash return. And another breakdown that they do that I like is in here. Oof. So equity wise, we're basically 20 years, well, probably somewhere in the middle. We're about 18 years before we recoup all of that. Another thing to consider when doing this is the BURR method. So you buy it, you renovate it, you rent it, and then you refinance it. So if you could refinance this whole thing, you get all your original capital back. Now it's an infinite return. And why I say it's an infinite return is because you're using OPM, or other people's money. If you want a better breakdown on that, or you want me to do an analysis for a BURR, I'm happy to do so. Personally, I hate the BURR, but it does work. It's a pain in the butt, but it does work. Now we're going to jump over and do my favorite part, analyze the creative deal. This is my creative calculator. You can get it off my website, christhompsonteam.com. Link will also be down in the show notes. So as far as ARV, we said our ARV was 160, and we know it needs a whole bunch of work. So at that, I think we offer them, we think it's going to cost us 50 in the renovation. So let's say I will give you $100,000 at a 4% interest rate. Because again, we don't want to have to refinance this, because if we can get a great rate and everything on that, why would we refinance? So to figure out what our PITI is, or principal, interest, taxes, and insurance, we're going to jump over to bank rate. So our offer price is 100,000. I only like to offer 5% up front. Interest rate will be 4. Taxes 362. 362. And that. All right, so that gives us a monthly mortgage payment, or principal, interest, taxes, and insurance, of $941. Let's go plug this back in here. $941. We were using $1,500 for our rent. Bingo. So that would be 559 for gross cash flow, 225 for $225 for war chest. And remember, that number will go up because we're only holding 10%, not 15%. But 150 towards management, and gives us a net cash flow of $184 a month. Now this one's going to be, it looks really good right here, but we still have to fill this section in. Cash to the seller, that's our down payment of $5,000. The agent, let's try to throw them $1,000. Assignment fee, we are not working with a wholesaler, so we don't have to worry about that. Closing cost is going to be that same 4%. Renovations, we said we're going to be 50 grand. 2 months of holding is just too much of this PITI here or your mortgage payment, no arrears, and a good TC or transaction coordinator is going to cost you about $1,500. So your cash out of pocket, you're pushing almost $66,000, and it's going to take almost 30 years on your return on investment. Not the greatest creative deal because it needs so much work. Now, if you're sitting on a pile of cash or you have another source to pay off that $50,000, okay, well, now that may not be a bad thing. To give you an example, if you're a wholesaler and you have $50,000 in deals, just say 5 deals at $10,000 a pop, you can then use those funds, dump them into the renovations on this property, and now you can write them off on your taxes. Full disclosure, I'm not an attorney and I'm not an accountant, but that's how a lot of people do it. Go raise a bunch of cash, dump it into a long-term property. Now you get all of the benefits of owning that property as the landlord. You get the tax benefits and all of the things to go with that. That is going to do it here for us this week in the Corner Barn on the weekly deal analysis. I would love to know your thoughts for 351 Carroll Street in San Antonio, Texas. We will catch you next week. Remember, all of the links for everything will be in the show notes. And if you would, drop a comment, share this with somebody who might find some value in it. We'll see you next week.